ModSquad featuring Ian Schnoor, Executive Director of Financial Modeling Institute, Giles Mayle, humble MVP and co-founder of Full Stack Modeler, and Paul Barnhurst, the FP&A guy.
This will be the first tool we've tested that's 100% a new spreadsheet experience. They like to call themselves the AI first spreadsheet.
I like that it built it and it linked it. It built the working capital schedule and it linked it in here. This is the correct flow. This is better than some other tools are done.
Something I thought was really unique, they say, hey, look, some of these other tools demo real well. We may not demo as well, but we believe we do a much better job of the real work.
Let's look at the depreciation PP&E schedule. Beginning balance plus CapEx minus depreciation. Excellent job on that.
What we've done here is a little bit more of the real work, and it has performed better. I think what they said is true.
Done a really, really nice job.
If you're wanting a third-party spreadsheet, AI tool, definitely one I'd consider, no question.
100%.
Today we're going to be testing kind of a unique name. Welcome back to another episode of the Financial Modeler's Corner, the ModSquad. Unfortunately, once again, I think the third week in a row, we're missing one of our three core members. Giles, unfortunately, wasn't able to join us this week. Last week, Ian and Giles went without me, and the week before, it was Giles and I. So we're running at 2/3 capacity today, but we're super excited to have you. I'll do a quick intro of myself, and then I'll introduce my co-host, Ann, and we'll jump into things. So my name's Paul Barnhurst. Obviously, this is Financial Modeler's Corner. Thrilled to have you here on the show. We're testing AI tools so you don't have to, and helping you give an understanding of what they're capable of doing. So why don't we take a minute and let you introduce yourself, Ian?
Sure. Thanks, Paul. I was going to say thanks, Giles, because he and I did it, as you know, last week when we tested another tool. But yeah, we had a great time last week, and you and I are going to have a good time this time. This week, I am Ian Schnoor, Executive Director of Financial Modeling Institute, FMI, the world's only financial modeling accreditation organization and community. And we are thrilled to be, I'm thrilled to be working with you on testing all these different AI modeling tools. Modelers all over the world have been really curious to know what's going on in the world of modeling and AI these days. And my entire career has been focused on modeling, from my time as an investment banker to working, to running my, a training firm, having the honor of building the financial modeling that's part of the CFA program. So I've been really focused on modeling for many years.
I know you have. You built many a model, and we've tested now. I think today is tool number 7. So I'm just going to run through what we've done. You can find all the episodes on YouTube under Financial Modeler's Corner. At the end, they're the last 7 episodes, I think, that we've done so far, 7 or 8. But we've tested Excel Agent, Rosie AI, TraceLight, Tabs AI, Shortcut, Elcar. And today we're going to be testing kind of a unique name, TrufflePig. What do you think of that name for a spreadsheet?
Well, TrufflePig, there is a meaning behind it for a spreadsheet. Naming anything, it's memorable. So I don't mind that. I like it. It's certainly unique. It's easier for me to remember that than some of the other names that might have been made up names. But yeah,
for sure. I try and decide if I like it or not, but I totally agree. As far as the marketing of being unique and remembering it, seeing the big pig and TrufflePig is really easy for me to remember versus some of these others that are words I've never heard of, right? They've made up a word as their business. So they do have that going for them.
And, we'd have to ask them why they named it that way, right? As you know, there must be some connection. Maybe we can figure it out. It comes from the origin, I guess. A truffle pig, which I remember reading about once, is a type of pig that is used to dig up truffles, right?
Yeah, and I know they're focused on trying to find insights, or trying to get the work done so you can find the insights. So I don't know if the idea is, hey, let us take care of all the drudgery so you can focus, like, the pig, on finding that insight or that thing of value.
Yeah, that's probably right. That's probably right, and it certainly is memorable. So we'll give it a shot here today, won't we?
All right. So why don't we start? We'll show their website. We'll go through the little one-pager we have with them, and then we'll jump into testing. One of the first things is this will be the first tool we've tested that's 100% a new spreadsheet experience.
Yes.
When we tested Shortcut, we did test Shortcut for at least one problem in their spreadsheet. Then we went and did the rest in their Excel edit. Here, 100% spreadsheet. They like to call themselves the AI first spreadsheet. Initial thoughts on new spreadsheet versus Excel add-in. And I know you're a career-long Excel user, so I'd imagine, like me, you probably have some strong feelings here.
Well, I mean, I've done some initial preliminary testing, and it's certainly been working well from our preliminary tests as a tool. Yeah, I don't love as much having to learn a new sort of quasi spreadsheet software, as we'll demonstrate. It does some funny things, but listen, if it's ultimately the best and the right tool, then I guess that's, people will be fine using it this way. But they've decided to have it in its own, app, as opposed to an Excel add-in. And I'm not sure if you know why they did it that way.
My understanding from I had a conversation with one of the founders back when, and I believe it was this one. I've talked to a few, but usually what I hear when they build their own spreadsheet is they're not confined by Microsoft rules, the older tech. It opens up opportunities. They're easier for development, right?
Yeah, that
That's
might make
generally
sense.
the argument for its own spreadsheet, which makes total sense.
Yeah.
And then the counter argument to everybody does Excel. Well, everybody's so used to Excel. Why do I want to fight against it?
Exactly. No, I could see that. You have your own. You could export it into any spreadsheet tool, right? And there are not hundreds, but there are a handful that are used, of course, and so allows you to work with anybody, I suppose.
Yep, that's kind of my thinking. It's really being able to control all the UI and UX and having ownership of everything. But that also creates more work versus just being the agent. So we'll see how it works. I mean, at the end of the day, like I said, I could tell you if it performs way better than all the other tools, I'd be open to using it more.
Totally. Yeah. No, you get
I
used
don't.
to it.
I mean, a spreadsheet is a spreadsheet at the end of the day. They're not
Yep.
that different.
Right. No, that's exactly right. So,
All right, so let's just jump through. We'll do a quick look at the website. Pretty lightweight. They're still in an open beta, but they do charge during the beta, which I think is kind of interesting. Usually you see kind of a free period, which they did have. So, we got the AI first spreadsheet, finally a spreadsheet that speaks your language, describe it, and it's done. And they showed an example of a DCF model, pretty typical. Skip the busy work, focus on the insight. So, get great answers fast, build presentation ready workbooks, work in one contextual workspace, understand your workflow. To me, what it feels like is, their marketing here is, here's what you can do. Like some of the sites, it's hype. We're going to save you a bunch of money. We're better than everybody else. Here, they're basically, it feels to me very a basic side of saying, look, we're here to help you.
yeah.
I don't know what your thoughts are, work at the speed of thought.
I like their vibe. I like their messaging and their articulation. I like the layout. I mean, somehow Giles and I were talking about this last week. A lot of the AI finance tools that we've looked at have a similar look and feel. Like if you scroll up, I mean, a lot of nice white space and a bit of a demo, and there seems to be a sort of more similar than not look and feel. But
Agree.
yeah,
I agree with you. They're more of a similar look and feel than not.
yeah, but I certainly like their messaging and their vibe so far. Totally.
One thing I think is interesting, this speaks to the AI advantage, web search. AI intelligently pulls facts into the grid as you work, ask questions, and compare sources without tab hopping. So, a little easier to do the AI, pull in from another source and compare it. That might be a little tougher to do in Excel. I probably could do it with Copilot and some of those things, but I'm going to guess, just kind of looking at that to me strikes me as probably something that was easier to do,
Yeah.
and a dedicated the way they built it, but don't know. And then obviously, like everyone, we secure your data. It's encrypted. It's going to be safe. I don't see the SOC compliance yet. That's probably why they're still in beta. I imagine we'll see all those logos like the others when they're done. And then get started for free. So very, very lightweight. Pricing, pretty similar to the others. They have a free version. Yeah. If you do an annual, it's $21 a month. If you do monthly, it's $30 for their pro and $200 for their super. And if you want a team plan,
can you go back up the description? So Giles and I were unsure last week on the pricing, whether you could get, for instance, the pro plan. It says you get unlimited default mode messages and 15 max mode messages per month. Again, it's not totally clear what that what what determines and what differentiates between.
You select. It doesn't show it here. I played with the tool enough. There's a place where you select default or max mode, and then it uses
right,
that.
but I guess it might not be clear when you're doing that whether you need one.
Oh
versus
yeah, I
the
get it. Yeah,
what,
that makes sense.
right? And should I be using for this particular request? Should I be using the default, or should I be using one of my 15 max credits, kind of thing? So right, you kind of.
No, I think that's a great point. It's hard to tell from there. You don't know
But
for sure.
anyway, let's take a look. And
I'll show one other thing real quick. Let me just pull up here. So, we've done some of these on the others. Beta, it's a new product. Launch date was April. So they're, not even 8 months in yet. They kind of focus saying, hey, we're focusing on doing the spreadsheet busy work. So not specifically modeling. They're broader than some of the other tools. They say their ideal customers, finance, operations, and sales teams. So they're just going after the hardcore spreadsheeters. So, and then something I thought was really unique. This is their claim is they say, hey, look, some of these other tools demo real well. We may not demo as well, but we believe we do a much better job of the real work. Couldn't validate the claim. That's what they say makes them unique. We'll put it to the test here in a minute. So, all right, let's jump into the tool. I think what I'll do here is I'm going to log in and just show the basic spreadsheet. So let's see. Can I get a blank sheet? I should be able to. We go here, new. And so this is what a blank spreadsheet looks like for them. Maybe I'll make this a little larger. You can import your, Excel or whatever you want here, up to 30 megabytes. So they're not going to let you import that 50 megabyte Excel file.
No.
You can download them as an XLS or a CSV, duplicate something, and then they have just a very basic spreadsheet. They have their chart thing, some filtering, grid lines. I'm not sure if I see a pivot table here. So it looks pretty lightweight, but I think the real point is to see how it does with its AI tool. So any other thoughts on this before we jump in?
No, it's pretty accessible for anyone looking at it. It seems pretty usable.
All right.
So
I have the first case here, and what I want to do, just so people can see, is I'm going to pull up the actual case in Excel real quick. Well, I'll do that while we test it, and I'll come back to that because it'll take me a minute. I don't want to spend the time. But notice the images aren't here. Anyone who's followed the episode, they see the name is kind of when it was pulled in. So
yeah, when you open the file, when you opened it, it sort of deleted all the.
It stripped out a lot of the images.
Yeah.
And so we'll show you what it looked like in Excel. So that was one of the first things that jumped out to me. But what I've done is I put the same prompt that Giles always puts in here. You'll go ahead and analyze this case. This is a basic eSports case. Notice that it's going to give you an example at the start of each of them, and you need to solve the problem. There's 5 bonus questions, 7 levels. I've said, please solve level 1 first before completing the other steps so I can review it. And what I'm going to do is I'm going to go ahead and use the Max, their most powerful model. I figure since we have access, we might as well.
Sure.
And let's go ahead and kick it off and see how it's doing.
Yeah, and let's give it a second here before we pause because let's see what it's doing and what it's thinking about. We, last week when Giles and I were on our own, we were just about to pause recording and it was done. It finished. So let's see how quickly this takes. But it's
level 1's done. That looks right. Updated 10 cells. It's thinking so pretty quick. I asked it to only do level 1. Perfect. The formulas have been applied. The results. It's giving me the solutions. It tells me the formula it used.
Can you click on the green cells?
Yes. Do you want to keep these changes? So what it does first is notice, I like this. It puts a box around it saying, hey, here's all the area we're working on. Do you want to keep these changes? So I can click in and see, it did left. That looks right. I-53. What surprises me is I would expect this to be red over here, kind of like Excel. You can see the blue around it. And you see that? Oh, there we go. If I click in up here, it gives me all the colors. Okay. So that all makes sense. I'm going to go ahead and say yes. And then what I'll do is I'll ask it to solve the rest of please solve the remaining levels and bonus questions. And while it's doing that, let's keep talking. And I'm going to pull up just so people can see what the case looks like in Excel so they can kind of see how it's different.
Sure, sure.
So I'm doing that here now as it looks like it's going pretty quick. It's doing level 2. It's analyzed that. So we got, all right, I have the case here. And we'll bring that up in Excel while it's thinking. So it's done level 2. That's done. It's on to level 3, it looks like.
Yeah, we'll have to see if it's done correctly, and we'll have to take a look at the nature of the functions. But there you go.
Yep.
You're getting
So here's what that case looked like. You could see quite different. All the color and stuff was really stripped out. So you could see, compare, if I split my screen here, let's come up to the top while it's working, and we'll minimize this for a minute. So if I just scroll up to the top, right, all blank there, you can't even see, so you can see the wording here, but even that, like the spacing, and so definitely pulls it in differently. That's something that I imagine will get better with time.
Yeah.
To be more on parity with what you'd see in Excel. Right, why don't we pause it for a minute? It looks like it's still working. Let's see how far
Is it working or is
got.
it done? Let's see. There you go. Well, why don't you click before you pause? Just click on level 3. Let's just see what the formula looks like in that.
All right,
the,
let's take a look at level 2 first.
Let's see
Look at
what the formula is.
I just hard-coded the numbers.
Well, oh, wow. Okay, so it's not. Can you click on the rest?
It did the formula here. So if I click here, it did a hard code. Level 3, it did what you would expect to call an indirect. That's fine. Put the column around it. I think all those answers are right.
Do you have the answers? Do you know if those are the correct answers? It does concern me. The previous
I do.
one,
Yeah, those answers are all right from what I can see. They all look correct.
Okay.
Let's look at level 4. Looks all right. And they did a formula again, which makes sense. So I don't know why they didn't do one for level 2. We'll have to ask it. That all looks good. Level 5, let's see how it did. Those all look right. It did a formula again.
Yeah. It's just fascinating to me. The solutions that the different AI tools use are pretty significantly different from one another. And I would expect that because different people would solve the questions differently as well. But they're solving them in very different ways. Some of them are much longer, more complex. Others are much more manageable. Like this is actually looks like a reasonable solution.
Yeah, this one, if I look at all these, they look short so far, man. Right? I'm not seeing anything long, any lets.
Yeah.
These all seem pretty reasonable. I mean, I might solve them differently. This one I would do that way. You know, this one here seems pretty straightforward. There's level 6. Hard-coded again. Interesting. I don't know the reasoning. It's the right answer. No, some are right, some are wrong. First 2 are right.
You want to ask it why it chose to do that, or if you want to just tell it?
I think we'll do that here in a minute.
I mean, it's done though, right? It's obviously done. And what about?
It looks like it's done. It missed some of level 7, so some is right, some is wrong there. First one's right, and then it looks like it got off on most the rest. So interesting. So not quite as good performance there.
Can you go to the very bottom?
Do the bonus questions. Let's see if it says it's done.
Is it done?
Oh, it's still solving the bonus questions.
There you go, Paul. It's doing the bonus. And there it goes. It's putting them in. So it saves them.
So first 2 are right. Get the formula. I don't know why it didn't upper concatenate. Oh, because you're looking for a certain letter and assume capitalized because it put the E. So that makes sense why it would do that. Okay, match max. Fairly simple formula. I'm not sure where they hard-coded a +10. Oh, regarding questions 11 to 30. So maybe that's how they started it. I don't know. The 108 is right. This is wrong here. Slightly off. And then this one is way off. But given, I mean, the map looks like it came through right. So I don't know why I got the colors so wrong. It's supposed to be 434 and it got 31. So we'll ask it here. We'll let it. It's going to give me its summary, probably another 20 seconds, and then we'll ask it why it did not use formulas on every level. So I'm just going to say yes for now. Why did you hard code some of the answers? You were supposed to include the formula for every level that you use.
Well, you're really scolding it now. You're really You getting scolded, and aren't you? Let's see what
I
it says.
am. No. So you'll laugh at this, and maybe our audience will. We did an interview on one of my other podcasts, and we had some guys from NetSuite. And one of the guys is like, you got to treat it like a junior intern. You just gaslight it and just talk. It's like you'll get better performance from it. You told us we gaslight our AI. You'll get better performance. So I need to be meaner, actually, is what I learned.
Okay. Okay.
So it said, you're absolutely right. I should have used formulas for all levels. Let me fix the levels where hard-coded values with proper formulas. Saying the formula for level 2, which, so let's see what happens now. Got an error. It's thinking.
Oh, I see. It's thinking about the levels that it put in dead numbers.
I will say this one ran faster than most of the Excel ones, it feels like. Not a lot. I mean, not LCAR, which I had tested last week, but I think probably on par, maybe a little faster.
Maybe. Yeah. I mean, other episodes, we've definitely had to pause before we could even see anything. But
what I do like in this one is I do like you can clearly see where it's working and kind of that color box around it.
Yeah.
That's nice.
Yes. Yes, I would agree with that.
Unfortunately, parsing to the limited text in level 2 with a singular formula is challenging without modern Excel functions like TEXTSPLIT. The formula I attempted aren't supported in this environment.
Oh, that's fascinating. It's fascinating. It's claiming that it understands how to do it, but the software doesn't have the capacity to use. You know what? Well, we may have just answered our previous question when we were applauding the simplicity of some of the earlier formulas, which is good. It might have been limited in its based on the. It hadn't occurred to me. Did it occur to you? It hadn't occurred to me.
No, like if I tried typing, well,
not
it
all
shows TEXTSPLIT right here as a formula.
What's that?
Why is it interesting? Because it's showing, and what I do like is it gives the column to that's
okay. It is there.
TEXTSPLIT.
It is there.
It's right there.
It is there.
Sure, go ahead and make the changes. I'm going to ask it. TEXTSPLIT is available as a formula in this spreadsheet. Please use it. And then we'll move on. We'll take one last look and move on to the next task in the interest of time for level 2. I'd say for answering.
Sure, let's see what happens.
Thank you. See, I'm being nice now.
Now you're being nice to it. Yeah. Let's see if that changes
it's
performance.
Interesting. It told us it can't, but then let's see what it does. Let's look at the others and see now. So, yep, that one was good like we expected. That one. This one has it. This one now has the formula. It used an index row direct. Let's see if I got them all right now. That's level 6. Still got it wrong, though.
The number, are they all wrong?
No, on level 6, it's hard to tell if all of them are wrong. Most of them are wrong for sure. Looks like almost all of them are slightly off by trying to see if they're all off by the same number. No, they're not. So I don't know what it did. And then level 7, they're mostly wrong. So it struggled with the mapping, and I don't know if it brought something in wrong or similar formula to the others. It could be the way it brought stuff inside, but all right. So let's see if it fixed number 2, and then we'll move on here. So it's still thinking on level 2. Oh, interesting. It tried a sum product, and now it cleared it. I don't know why it's not using a TEXTSPLIT. Interesting. You're right. Of course, right? AI always defers to you that you're right, whether you are or not.
That's right. That's right.
And calculate the sum of the 2 largest values. So interesting. Now I want to see what this one fishes. We'll let it work for just one more second, and then we'll move on.
Yeah.
Thoughts so far as you watch this? What's kind of your take here?
I never want to lose sight of the fact that it's impressive that it can do anything, that you can, enter an English language prompt and get an answer, and it knows how to read it, find where it needs to go, and populate some sort of a formula. I mean, that's still mind-boggling. Yeah, I don't love that it, hard-coded data, that it seems to have gotten a bunch of things wrong from what you are telling me, right? From looking at your answer key. So I don't know. How about you? I sort of mixed on it. What do you think?
Yeah, that's kind of my view as well, as mixed. It didn't seem to perform quite as well in giving the answers. The one area I was impressed on the answers it did give that were formulas, all of them were simple. If part of that is how the AI is thinking about the spreadsheet, that could be why. Yeah. But I always appreciate when you give me a simpler answer over a more complex answer.
Absolutely.
So I do appreciate that part. We got that answer right there now. It gave me a formula. We'll give it 1 minute here. Okay. Complete it. See, it just won't complete level 2. Interesting.
While TEXTSPLIT is available, it says using it with large function encounters compatibility issues in this Excel environment.
It's saying this would be an answer, but it didn't put that answer in. All right, interesting. So clearly a little bit of compatibility issue. I think we call it good. I'm going to say yes. We're going to close that one. Let's just download it so I have it. You can download his Google Sheets. That is nice. I guess they optimize it.
Yep, totally.
I do like that. All right. So now here's the more complex one. I'm going to shrink this down a little bit. So this is the Giles case.
Case study with Giles. Again, it's kind
of
made
how
a bit
it came through though, right?
Is that?
The image, look how the image came through to what it normally looks like. Again, it really struggles with the pictures and stuff right now.
Right. Yes.
And just for our audience, I'll show you what it looks like in Excel real quick. So you can see the difference is it can't bring in the pictures. It kind of struggled with getting the stage quite right. If I compare the two there, you can see that the audience pit, the orchestra looks fine. But without the rest of it, it looks really weird. But we don't really care so much about the look for this. We want to see how it does on the case. So let's go ahead and do the max again. I would expect it to really struggle with this case, given it struggled with some of the compatibility and formulas for a simple case.
Yeah.
Let's go ahead and put it in. Please complete level 1 before proceeding to the other levels. Thank you. See, I'm being nice again.
You're always so polite.
You made me a conscientious of whether I'm being nice or not in.
Yeah. No. You have nothing to worry
So
about.
now I'm going to be self-conscious. No, it's all good. I'm satisfied. All right. Why don't we pause it for a minute and we'll come back. I imagine it'll be for a minute or two here. So we're going to pause.
Great idea. Back in a moment.
And we'll be back with you here in a moment. All right, we're back. We gave it about 12 minutes or so to run. Solve level 1, did that beautifully, got them all right. We can insert those answers if we want. It did level 2, it hard-coded them. And then it struggled a little bit.
Well, that's not great though, right?
What?
Level 2, that's not ideal if it's hard-coded.
No, hard-coded, it got them all right, but it didn't give us the formula like we would have liked. Level 3, it's hung up on. What's interesting, what I did notice, and I know we've seen it with others, is the answers are in this file. And it was able to look at those answers and say, let me redo it, which I appreciate. You could see the learning and figuring it out. Also, it's a little like cheating, right? If I was in eSports and I had the answers, makes it a lot easier.
Yeah, and it's obviously, it knows what it needs to work towards. So, but it's chugging here. It's chugging, right? It's gotten through a few levels. It's really chugging to work through the rest of them.
It definitely is. It's on a little bit of the longer side. For other tools, generally been a little quicker. I think the longest we've gone is about 14 minutes, and we're right about 14 minutes now. So I'm going to go ahead and kill this one, and we'll move on. I mean, my take is maybe it would have got there on all of them, but took a little longer. Didn't, struggled a little bit, but not bad. I mean, we can see, similar to all the other models, it's getting some of the answers right. It's sometimes following instructions. So, similar. The things I like is you get to always say yes to apply it. You can see that. I think its thinking is good and it shows us that. But let's move on to the next one. This is one of the areas I've seen an analysis of them before. And when they analyze some data and put together a kind of report, it seemed to do really well. So I'm hopeful here we get a kind of a good result. So we're going to take the same prompt that Giles has used every time. We're again going to use the max model, let it think a little longer, and we'll go ahead and kick that off.
And what are you asking it to do?
So what I'm asking it to do, let me read through it. So we have great point here. So if someone's coming in for the first time, this is just a ledger data. So what we have here is we have a monthly P&L summary for ourselves so we can see it. We have a chart of accounts, and then we have a trial balance. So, different accounts, product sales, revenue, sales department, and the credit and debit amounts. And we're asking it to analyze the data. And I would like you to produce a comprehensive financial summary of the data, the performance of the company on a separate tab. Make the summary professional and include visuals with a mixture of KPIs and graphs charts. Review your own work before completing this task. The final summary tab must be top quality for a senior board meeting presentation. So we're basically saying, give me your presentation. Let's kick it off.
Let's give it a moment to see how it performs here.
So I can,
And
if we go through the thinking here, and I like that it leaves it and then minimizes it. So the user has, here's the data it has, the user wants me to do the following. It breaks it into steps, and then it says, I should do this. It analyzes it and creates the report of the 11 steps, and we'll check them off. So we can see it's thinking, it's done, it's read the data, now it's working on the exercise. We're going to pause. We'll give it a few minutes to run here, and we'll come back. Welcome back. I wanted to let everybody know we have a third co-host with us today. We've replaced Giles for a few minutes. Do you want to introduce our third co-host in?
yeah, this is actually my dog Giles. So we've got another Giles. No, this is Benny. Benny is cockapoo, and he's a very good financial modeler, actually. So he was curious to see what we're doing, and so I thought I would bring him along for this part of the demo.
All righty. So we can see here it thought for a few minutes. It gave us a summary of what it did. You can see all the key highlights of the complete summary. It had 11 steps it did here. Although it's interesting, it didn't check all of them off, even though it says it's done. So that's a little weird. Visualization created, and it says yes. So we can see where it worked. Let me pull this back. You can see all the areas it worked. I highlighted everything. We're going to go ahead and hit yes. And, decent formatting. The one thing it didn't do a good job of is I would have liked it to fix the column width. You can kind of see not great there, but as far as I can tell, I did some checking. All the answers appear right. You can see the formulas. It used a sum ifs. It used a sum if here. It did hard code the values, which I would have liked to see it link here. But, not the worst. It did give us, let's look at it. It did a P&L trend analysis. Then it did a revenue breakdown by category, which totals to the revenue up here, which is the right number. And then you can see it showed what percentage of them all of them were, what the average monthly was, did something similar for expense analysis, looked at both COGS and operating expenses.
It's doing a good job.
Yeah, key insights. And then it even did a year-end financial position. What's your current assets? What's your fixed assets? What's your liabilities? I don't know if I've seen another tool get into that, but one of the better analysis. And the area I think it did the best job on is these graphs, for the most part, are really easy to read. The only thing is I have to move this out of the way to see all of them. I would have liked them to be over a little further so that that's not in the way. But the graphs are relatively
minor.
clean.
I would say that's minor. Obviously, that's not a right.
Yeah, right. If it does all this right, I can move a graph. Not a
you can move them. Yeah, no, I'm impressed.
So yeah, I noticed this got cut off a little bit, the gross profit, but again, on the ledger, I don't know why. If I enlarge it, but on the whole, one of the better I've seen. I'm impressed. I think it did a really good job here. Any thoughts before we move on to modeling?
No, it again, I agree with you. I think it's understood the ask and put together at least a very, very strong starting point with some visual aids.
Yeah, this is something, if you gave me this, I would ask it to get rid of the zeros, but I could either work with it or clean it up in fairly short order. I think I could have something that's presentation ready, and that's what we want.
Yeah.
All right, why don't I pause here? We'll get you set up, and then we'll be back in just a minute with you folks. All right, we're back. We've completed the first 3 exercises from Giles, and struggled a little bit with some of the Excel stuff. Did pretty good on level 1. Definitely struggled a little with level 2. Took longer than planned, and then did a very good job on the executive summary we asked for. One of the best we've seen. Now we're going to put it through some of the financial modeling paces. So, why don't you take it away?
We are. Although the first thing I want to do is something a little different. I'm going to throw a bit of a curveball. When I was loading up this tool, when I was getting TrufflePig set up, it said, it told me what I can ask for. It said, you can ask for a lot of different things, and said you can ask it to pull some public company data and build a DCF. And it literally said, it gave me an example. It said, you can tell it to build me a comprehensive DCF model for Nvidia using real financial data. So I thought I would take its exact prompt and see what happens. So I'm going to toss in its prompt that it told me I could ask for, and I'm going to put it in there and see what happens. I've got nothing on my screen. I just said, build me a comprehensive model for Nvidia using
Do
real
we want to
financial.
try? Let's see what happens with the default, and then if it doesn't, we can try the max real quick and see if we get a different answer.
I use the default. Yeah, I use the default, and let's see what it does. Now it
Yeah,
has stopped.
exactly.
It has stopped here. It said, thinking, I'll build a comprehensive DCF model for Nvidia. Before I start, let me clarify a few key parameters. So this is great. And you know what? I love this. And, this is a theme that I keep talking about in all of these tools. For anyone who's of the view that AI tools are going to replace you or that you might want them to replace you, I would say that's probably not the right way to think about it because it hasn't done anything yet. It says it wants me to please provide your preferences. So it's looking for my guidance on the projection horizon. Do you want 5 years or 10 years? Revenue growth. Should I use analyst consensus, historical average, WACC components? Should I calculate current market-based WACC? How should I calculate the WACC? How do you want me to do the terminal growth rate? What kind of long-term growth rate? How much level of detail? Do you want quarterly or annual, right? Sensitive. So it's asking a lot of, you need to know how to answer those questions. And so it says, please provide your preference, or can I proceed with the standard defaults? So standard defaults, 5-year annual projection, market-based WACC, 2.5% terminal growth. Okay, and a sensitivity analysis. So let's just say for now, please proceed with standard defaults. Let's see what happens here. Please proceed with standard defaults and come
And they
back.
all seem reasonable. I mean, right, you could question some of them, but there's nothing there that I look at those defaults and say, what were you thinking?
No, but what I'm kind of curious to know is, so it's doing, right, there's a lot. I mean, I used to, in my training days, I used to love teaching valuation and DCF valuation. There's a lot of nuance to doing a DCF. There's a lot to understand. Are you using unlevered cash flows or levered cash flows? Are you using how are you thinking about the terminal year, the terminal period? How are you taking the terminal value? Or are you using some sort of, a perpetuity calculation or some sort of a multiple? How are you thinking about the long-term change in working capital? So there's a lot to think about. What
What are all these images? I'm guessing these are links to the different websites it's gone to.
What?
So right, you see all the images after each of the thinking.
Yeah,
and it's
no, I
going
can
out to
see
the
that.
web.
I can click on one. I don't know what.
Yeah, click on one. Let's see what happens.
Well, it's taking me to something called finbox.com, and it's wanting to verify that.
So whatever thinking it does, it allows you to see all the websites it searched.
Okay, so it's searching.
That's helpful.
Yeah. It's definitely looking at
although that's a lot of websites. It makes you a little nervous. Why is it looking at so many for each question?
Yeah. It's going to a whole bunch of different sites. This is the Financial Times. I can see this here. It's like that's Investopedia. Well, it's still thinking. And again, this is interesting. I tried this again earlier and it provided me a response very, very quickly. In this instance, it's this particular one. It's looking for what are Nvidia's current total debt, cash and cash equivalents, shares outstanding. Oh, here we go. We're finally getting something here. Beta and betas as of fiscal 2025. So it went to a whole bunch of sites to kind of, arrive at. I mean, that's fascinating to watch what it did here. So what did it give me? It says it's an Nvidia DCF valuation model, all figures in dollars as of November 21st. That's today. Key assumptions. It's using, revenue growth, operating margin, tax rate. It's got a bunch of assumptions here. It's got the WACC calculation. So arrived at a risk-free rate. It says 10-year treasuries. It's got an equity beta 2.1, which seems like a reasonable beta for a stock like this type of volatility. I'm not sure how it derived the WACC. The beta, I could ask it. It's using a 5.5% market risk premium. Come up with a cost of equity of 15% and a cost. Oh, here we go. Oh, look at that. Formatting on the fly, real time. It tells me that the pre-tax cost of debt is only 3%. That's a little interesting. So again, as a modeler, as a evaluator, I need to think about whether this makes sense. The first thing jumping out at me is it's wanting to use a cost of debt, a long-term cost of debt at 3%. Paul, do you think it's reasonable to assume
So
a
let's
long-term
say, is
cost of
that
debt?
so that's not that's before tax benefit, which means that you'd be like 2% when you figure the tax.
Yeah. Do you think it's reasonable to
No,
assume a long-term cost of debt pre-tax that's lower than the risk-free rate?
that's what I was just saying. I'm
That-
like, okay, if that was post tax, even then it's low,
yeah.
but at least
So
it's, yeah.
let's see what it, so it arrived at it arrived, and again, the keyboard shortcuts are different. I discovered pressing, most people know F2. F2 doesn't seem to work, but F2 and then the up arrow allows me to see what's going on. It's got a long formula in here. It's got, oh, what is it doing for the weighted average cost of capital? So it is, so it's calculating. That's interesting. It's doing it differently. And a couple of funny things going on here. So it's showing me the total value of the company on a percentage basis. It's adding
And
up.
it looks like that's a mistake, that it shouldn't be percentage. It should be dot. Why it's done
Shouldn't be so
percentage,
right.
not
It should be
sure.
in dollars. Now, this company has very, very little debt. This company has very little debt. So, of course, the vast majority of the total value will be the equity
So in the
value.
bottom line, it's really almost immaterial to the WAC because it has so little debt, but
That's right.
3%
There's
is
so
still the
little
wrong
debt.
number.
But what, let's see here. Now it's done. Do I want to keep these changes? Let's see what it's done. It tells us, it says complete. I built a comprehensive DCF model for Nvidia using the fair value per share is $48.55 and equity value. Now it tells me where is the current, the stock price is way above that, I believe. And again, I just find it interesting that yesterday it did a number of things differently, and it showed me some different information. So as an example, and I'm not going to spend too much more time on it, it's doing something here. You better believe that I'm going to have to dive into understanding everything that it's doing because, first of all, yesterday it was telling me what was the, if I want to keep the changes, yes, let's ask it. So it tells me that the fair value per share is 48.55. Let's just ask it, what's the current stock price of this company? Because yesterday it was telling me the premium or discount to the stock price, and it's, I
I
don't know why it
just
needs.
searched. It's 181.77. Let's see what it comes back with.
Yeah, I wanted it to tell me because,
Yeah, so roughly closed at 180. Okay.
so it's telling me this means the stock is trading at a significant premium, 272% above the DCF's model's fair value of 48.55. This is what I wanted to get to. It's generated a DCF for Nvidia telling me that the fair value per share is $48. I hope to heck that no investment banking analyst or any other analyst goes out there, runs a DCF on Nvidia using a tool like this and gets a value of $48 and comes back and allows the MD to say, what are you talking about? The stock price is $180 per share. So it is not reasonable to derive a DCF that generates a stock price that's 1/4 of the current market price. I mean, as I said, I've been teaching and I used to teach DCF valuation all the time. There are only two reasons. There are only two reasons why a DCF model might generate an answer that's different than the current stock price of a public company. All right. There's only two reasons why the DCF value might be different. Number one is because your DCF, you and your DCF are making significantly different assumptions than the market's assumptions. So either our assumptions are much, much more significantly more
More
muted
conservative.
and conservative and cautious, which is a possibility. So that's the first possible reason. Or the second reason is because you made a mistake, because there's an error in the calculations. Now, the default DCF is so significantly below the current fair market price of the company that you better believe you're going to have to understand exactly what's going on. And so it's very possible that your assumptions are just a lot more conservative, but it's also very possible that there is a calculation error somewhere. And in fact, what I would think, and I noticed this the other day, so it's derived a weighted average cost of capital here. It derived a weighted average cost of capital. Again, I want to crawl through that and see if that is doing that correctly. Here, it's taking the equity value, divided it by the total, which is, so it's like 99% multiplied by the cost of equity. Okay, so it's basically there's no debt, so this part may as well get
You could pretty
eliminated.
much delete that out, and your answer changes, I think, by like a couple
Nothing,
basis
right? But the
points.
point is this. The point is yeah, I think is that is it reasonable, right? Is it reasonable to assume? I mean, again, in the world of a DCF, when we want to value a company, is Nvidia going to have exponential, extraordinary growth forever? No. Is it going to stay an all equity finance business with no debt forever? No. And if you are building a DCF, the purpose is to think about a long term sustainable value of a company. So is it reasonable to assume almost no debt in the long term, right? It's assuming that there is not going to be any debt in the long term of this business. Now, I'd have to crawl through to understand what is, but I need to understand, thinking, yes, it's reasonable for ADS. Here's why. Net debt is already, well, that's just telling me what it is. Tech sector norm. Yeah, I mean, it's true. So it's telling me in the tech sector, companies do have minimal debt when they get large, and maybe that is a possibility. That's fine. So why do you think? I mean, I could ask it. Why does it think? Why do you think the DCF value is so much lower than the current stock price? Right? I'm curious to know why does it think the DCF value is so
I'd be
much lower?
curious too, because if you look at it, it assumed a 25% revenue growth rate. It assumed the same operating income. The WACC doesn't look totally crazy. The terminal doesn't. So I would expect it to be quite a bit closer. Could still be off.
Right. So it thinks, it thinks that the WACC is too high. Now, let's see here. That's what, so it's interesting to me that it actually has an idea. So if the WACC is too high, well, it's the one that calculated the WACC, right? So why
But
did
it's
it,
saying, look, we use their historical volatility, but given their current dominant position, maybe we should have assumed there's going to be less volatility. Okay,
sure.
maybe.
Right. The point is, I need to be able to have a conversation with it and understand what it's doing. It's using, I don't know how it arrived at the equity beta. Of course, when you do a forward-looking DCF, all DCFs are forward-looking. The beta should reflect future thoughts on volatility, not historical observed beta. So it might need to come down. The market risk premium, it seems reasonable. The cost. So again, it's got a cost of equity here at 15.7%. Yeah, as I said, I don't see anything
The other
blatantly
thing
wrong.
is, it looks like, I thought it was interesting. The number two, revenue growth is too conservative. It grew last year at 114%, and they're assuming immediately it goes down to 25.
Yeah, that's right. So
But also, they're assuming for the next 6 years it's 25. 25% growth rate year over year as that number grows. That's really hard to do for 5 straight years, even for a fast-growing public company.
maybe it is, what did it do for the terminal value? For terminal value, it's used a perpetuity calculation here. Maybe it's right. Maybe the stock is so overly priced, like a lot of people think it is, and it's going to, drop down to a more reasonable level. That's a possibility. I guess I'm, continue to believe that we're going to have to, anyone doing evaluation like this is going to have to understand. So I'm impressed. I love the fact that it's given me a good start on trying to value this company, but I really believe that we're going to have to understand it extremely well to know whether it makes sense. I mean, is it using a long-term capital structure, which is reasonable, which is what you would want to do to DCF? Is the cost of debt reasonable in the WACC? Is the cost of equity reasonable? So we have to be able to go through, ask these questions and challenge it. And that's going to take some time as well, but I certainly like what it is.
It looks like all the formulas are relatively simple. The numbers look right in the sense I don't see glaring mistakes here.
No,
This is really one where I could take this and go back and forth with the AI and change
exactly.
assumptions so I'm comfortable. Like, I would be comfortable using this for a basic DCF as a starting place.
This
Going
is
back
that
and
little
forth.
helper on my shoulder that I've wanted, right? This is the helper that says, get something going. And it's actually giving me some good suggestions on the terminal value growth rate may be too low. It's telling me that maybe our revenue forecast is too conservative. So, right. I mean, ultimately, I'm the one that's going to be responsible for this DCF. And I'm going to have to go back to my boss, my board, my management team, my client, and defend it and explain it. And so, listen, I like that it's generated this, and I like that it is giving us some thoughts on what we might do to, it would be very unusual to present a DCF with a value that's so radically different than the stock price, because The stock price is simply the market's reflection of value, which is thousands and thousands of investors all doing their own DCFs, right? And so if every investor thought that this was right, then if every single investor thought that this was right, then of course the stock wouldn't be at $180 because it would trade
Yeah, the
where
stock would be relatively close to $50.
exactly, if that's what the world thought. So why don't we move on? This was an interesting test. I'm actually quite pleased with the starting point that it's given me. And let's go into this. Let's go take a look then at, let's go actually see, let's do this. Let's actually go see how it can build a financial model. Let's go see that one. Let's go
Okay,
see,
sounds good.
and maybe we'll,
Yeah,
because
I'm really impressed with the DCF. I thought it did a good job.
I thought that as a starting point, yeah, it's not for the faint of heart and it's not for someone who's brand new to valuation, right? You're going to have to understand what it's
Exactly.
done and you're going to have to challenge what it did in terms of its choice of every single assumption, but it clearly was able to do that. Now, here's the simple reality as well. Given the amount of time I think it's going to take for us to crawl through. I don't actually know how much faster that was than, I mean, most of the time in that DCF is going to come from massaging it, tweaking it, playing with the assumptions, checking it, right? I mean, literally all it did is it took some historicals, built a very simple forecast using a revenue growth. So I don't know that that saved me. But if I wanted to get a back of the envelope DCF on 25 companies, and I said, do the same thing on 25 sheets for 25 companies, it would be a great starting point and give me a chance to play with it. Let's
You
take a
could
look at
even
this.
ask it, go out and look at, the top 50 companies that have grown the most over the last month and bring
Yeah.
back that DCF to look and see, hey, do I think there's one undervalued, and get you started. Yeah. Kind of like a screener in some ways, but it's built something you can play with.
Very impressive in that regard, for sure, for sure. So let's see if this is just the 3 years of historical financials, and I'm not sure why I'm not seeing here. I'm not.
If
This is the
you'll need to expand it out. If you expand out column C, for some reason it expanded out D and not C. So go
well,
up to the top and
it's being a little bit odd, even as I toggle around,
yes, it
scroll
is a
around. It's
little.
being a little
There's some work that needs to be done when it brings in an Excel file. There's
buggy.
no
Yeah,
question.
like it's
That's an opportunity.
there's no reason why it shouldn't be showing me the company name, but that's okay. So I'm going to say build a 5-year forecast model on the model sheet, which is this one for the years 2025, 2029, build separate schedules for revenue, costs, etc. Make reasonable assumptions. And this is what I've been asking every other tool to do. Let's see, how it performs. Let's see how the TrufflePig tool performs. It's thinking, and let's see what it does.
Definitely thinking. Should we pause it and give it a few minutes to work?
Yeah, let's just give it another second. The
Okay.
tool we looked at last week
Oh, it
actually
may
started.
ask you a bunch of questions similar to the others too. Please
Yeah, and it
provide your
started building
assumptions
right
or let
away.
me use reasonable defaults.
Right. I'm seeing not the same, granular flexibility to slide left and right. I mean, as I move to the right, I'm very quickly flying way off to the side. So makes it a little bit more awkward to work with, but that's okay. So is it asking me some questions here?
Yeah,
So
it's asking you a bunch of questions about revenue, cost, and saying, hey, do you want to tell me the assumptions, or do you want me to use default?
yeah, it says I need clarity. I need clarity. It says right. It wants clarity on. So it's got some really impressive. What it's done is it says revenue growth for 2025-29 showed a
Showed a
13.4%
decline.
decline. But why? How?
It's saying 2024 showed a decline of 13.4%. Is this an anomaly or trend? So it's looking at 23, 24
showed
and
a
saying,
13.
what should I do going forward? It's worded a little weird there.
The forecast for 2024 had a bit of a decline, right? Is this an anomaly or trend? Should costs remain as a? So I like that it's asking for clarification, which means I need to know what to ask for. It wants to know what are the annual capex amount? What depreciation method should we use? So I like that. It's asking for clarification.
I like working capital. Hey, do you want me to take a simple percentage, or should I do historical days?
Or let me use reasonable defaults. Okay, please. I'm going to say, please use a revenue growth rate of 5% per year and make reasonable assumptions for everything else. Right? How about that? Let's see what that does. So because I don't want it to project a 13% decline in revenue every year, then we'll quickly get down to zero.
Yep,
But
agreed.
let's see. So I wonder how much it's going to be comfortable trying versus Okay, it's so now. Okay, so let's see. Why don't we pause? It's got zero. It's figured out that it needs to do 11 steps. Let's put this on pause and see. We'll wrap up and show people what it comes back with.
All right, it's finished running. It's run for probably 7 minutes or so. And we're going to go ahead and take a look live here and see how it performs. So it's asking us if we want to make the changes. And take it away. This is your baby. You're our modeler.
Sure, I'll do that. It is yeah, it's so I haven't accepted anything yet. It took about 8-ish minutes or so.
Yeah, 7, 8
It
minutes,
did a
something like that.
working, right? It slowly went through and crossed off its 11-point to-do list. It created, and then it said it was thinking, and then it said done. And then what it says is I've successfully built a comprehensive 5-year model on the model sheet with 7 supporting schedules. It said I did assumptions, 5-year annual growth, which is what I asked it. Costs. It said assumed cost of goods sold 75% of net revenue. Okay. CapEx. It's made an assumption for CapEx, depreciation, debt. It assumed an annual repayment. So this is pretty good. It's made some good assumptions here. I like this. 30% effective rate dividends, 20% payout ratio. This is pretty wild so far what it's doing. I'm not going to lie. And then net income is going, and then it's got some highlights. It's got some investment, some highlights here. Net income is going to go from 2.2 up to 26. EBITDA is growing. Debt's coming down. It's just giving me a nice summary.
It says balance sheet remains balanced throughout. Let's see if it really did, but that's nice.
Yeah, let's see. The balance sheet remains balanced. So I'm fast to see.
I don't know if that's a forecast highlight. I would call that standard of your work, right?
Yeah, I would. Oh, exactly. Now, it's put in all of these pieces here, and it's put a bunch of schedules at the bottom. I am going to say yes. Let's accept. So I'm going to accept, and I guess that means it's just here now. Now, again,
yep, yeah, you can. It's just there now.
Tiny bit awkward that I can't easily see all my columns.
Then you have to expand them. That's annoying that it doesn't.
Yeah, and you can see the
next column.
The labels don't go into the blank cell, so I would have to really make one column wider to see another column here. What I could do, we talked about, what I could do is I could download this into an Excel file.
Let's go ahead and see what it looks like. I think it leaves it here and it gives us a download separate, so you can just open the download.
Sure. So and you can choose, and this is probably why we talked about, I think we talked about this, right? Why they built it as a separate tool is it allows you to download it into either Google Sheets or Excel, which is nice. Let's export it. Now, this might require me to change my screen share because it is. I'm going to have to change my screen share quickly.
We're going to pause here for a minute as he brings up the Excel file. We'll be back with you in 1 second. All right, we're back. We've opened up the work it's done in Excel. Let's go ahead and take a look and see how it did.
So just downloaded this straight into Excel. It's linking to schedules, which is nice. It's obviously built a schedule down below. We'll go take a look at it. This is the first time seeing of this here. And, obviously the formatting is not ideal. I would love it, but that's not a big deal at all.
And we probably could have asked it to format and got a little better with some prompts.
Absolutely. It's got, let me just, deal with some little consistency here on.
Of course.
Decimals so that I can at least read the numbers
and
more.
Notice how much faster you're working now that you're in the tool you're used to.
Yeah, that's funny. No surprise. Now the net income, interestingly, is not coming from where I would expect it to. And this is what we found some of the other tools have struggled with, is understanding some of the account. When you ask it to build free form, sometimes they struggle with the accounting ideas and the accounting system. So net income, most people, now it's the right number. I'm just not sure what's grabbing it from.
It linked to the schedule is my guess. Or no, it wouldn't be the schedule because net income to column doesn't come from a schedule per se.
Net income should just be right off of the income statement.
Exactly, yeah. I was just going to say, I'm like.
So let's see what it did on that front. But I do like the fact that everything is just straight links so far. So we're going to see what's happening here.
Why did it go, 1 second, why did operating cash flow go so negative? Can you go back up?
Not sure. We're going to have to come back to, because.
Okay, we can come back, but I just noticed.
It's assuming a monstrous investment in working capital every
from
year.
Zero to that is definitely a red flag.
That's not likely. That's not likely that it's going to be that it's going to have an enormous change in working capital. Let's see though what is going on.
And the balance sheet doesn't balance despite it saying it balances throughout. It's out by about 50 million, almost the working capital.
does. Obviously, the historical balance sheet balances here, right? We can see that. Let's carry it across, right? Drum roll, please. And of course, it doesn't. So it's off. Even though you're, as you just
If you go up, it's almost exactly off by, I know it's not just that, but it's almost exactly off by the working capital.
well, that could be a big part of it. And again, the point is, and this
I'm
is what
sure
we've been
there's
doing.
more than that, but it's just interesting that that's the rough number.
And yeah, in every episode we've been saying, so now the key is to understand what's going on, what you're doing. It's built some schedules. And wow, this would not be recommendation for best practice on a on any formula to have an enormous change. And I have to check and see if this working calculation is actually working correctly. But what it did is it is right. So it's okay. So it's forecasting the receivables based on days. It's forecasting. So I can tell you just instinctively by looking at this, right? If I look here, this is for 2025. I can tell you that if receivables is going down, that should be a slight inflow of cash, right? Inventory is about flat. Payables are around flat. And the prepaid expenses are approximately flat. Everything is about flat. So how is it possible that if everything is flat, the change is so negative? That's an error. It makes no sense. And so there's a huge, huge error, obviously, in what it's built doing when it arrives the change in working capital. And is this number
And even
actually
look at it. So yeah, I mean, it has some
so I
negatives,
like that
some
it did this. I
positives.
like that it built it and it linked it. This is better than some other tools are done, right? It built the working capital schedule and it linked it in here. This is the correct flow. It's the right linkage, but that
We'll notice
is
in 24, it tried to show it's 55 million, but the real thing is 0. So it's formula in each. Why is the formula? If you go to G177 is 0, which is what it shows up above. Oh, it just linked that one, and then it tried to do its own formula and messed up.
yeah, there's no previous period here, but let's take a look at this one here. So we can all agree, right? The change in working capital, if I just make these numbers again, this is where we're seeing, a lot of challenge in these tools. They don't seem to really understand the purpose of these ideas and these concepts. So what I would say is, now, first of all, this working capital schedule is not optimal here, but what I would do is I would start by adding up the, let me just add a couple rows here. Let's see what the actual working capital is. So we do have our assets, right? We have our total assets, receivables, inventory, payables, our assets, prepaid expense, assets, and other current assets. Sorry, payables, prepaids.
Accounts payable should be a liability, right?
Where chart, of course. Yeah, that's I
Okay, I
don't
was
like
looking at the going, when you said asset, I'm like, you must be right. And I'm like, wait,
yeah, no, I
no.
don't like that they had in that order. So where are the assets? The assets are my receivables, my inventories, and my prepaids, of course, right?
And
And
other
those are
current assets. And
and
then
then
the
my
other two
other
are your
current assets
liabilities.
here. So I don't love that it threw me off because it doesn't have them in the right order. And then of course we're going to subtract out the payables, the accounts payable, and the other current liability. So this is my net working capital. Would you agree with that?
I agree.
That's my net working capital and is just the assets minus the liabilities. And then the change, right, should of course be the last year minus the current year, right? It should be in this case. So this is the change in working capital that should be flowing into the cash flow statement, not well, I don't even know why this is the net. This is I'm going to call this the net working capital. This is my net working capital here. This is correct. Assets minus liabilities. The change should be the difference year over year. Last year minus this year, because if the working capital is going down, cash is coming up. So cash is coming up here. So gosh, it appears it's got the sign wrong. It took the negative of this minus that, which ended up, look what this little piece of calculation does. And this is just a little bit concerning. By taking, I'm just going to put these two in brackets. So this is what it did here is it took the difference in the receivables, right? Agree with that? And if I do an F9, just that in itself, because it did a minus, minus, a minus, right? A minus, it flipped them. It used its mathematical operations incorrectly. It's ended up with negative 55. So that's a big error. So that let's do this. Let's link the cash flow statement to row 180 here and see what that does. So that, but again, you really have to understand modeling and how these calculations should work. So really, that should have been, I'm going to copy that over. So now we've linked it correctly to the change in working capital. Let's see now, that should be fixed. Let's see now if that did anything to get, yeah, that was the only thing, Paul. The balance sheet balances now. Everything else that was the only error here. Otherwise,
And
I
it
got to
may
tell
have
you,
found that itself. We could go back in real quick and ask it to see if we could find why it didn't balance in the
yeah, except now I
AI
have,
if we wanted. But
oh, sure, I have to go back to the AI. Otherwise, I have to tell you, it's doing a really fine job here, right? Let's look at the depreciation PPE schedule. Beginning balance plus CapEx minus depreciation. Excellent job on that. The cost schedule, the revenue schedule, I'm not going to crawl through them all because we're already probably, at time here. But other than that one error in the working capital schedule, it feels like it's done some really nice work. And other than the formatting and the presentation of it, let's just see here. Beginning retained earnings, it added in net.
what did it do? Did it do a revolver?
Why is it calculating net income as, did net income as J153 minus J155? It is, interestingly, okay, that's interesting. That's interesting. It's calculating net income on the equity schedule, even though net income already exists on the income statement above, but it appears to have gotten the right answer.
And that's why it was linking wrong above. Remember that income, you're like, why is it linked down to the bottom?
Yeah, it's coming down to here. So it calculated net income. So listen, overall, I think that this is done a really nice job. I think with a whole bunch of additional prompts, we could get it, we could clean it up. We could pull out the assumptions. We could refine the assumptions. We could add a summary page. We could probably add scenarios. It's not taken us zero time because we've had to find it. We had to troubleshoot an error, which we had to understand. We had to, and again, would any quickly realize that this was the obvious problem? I'm not sure. I mean, to me, I was, I was able to hone in on that quickly because it seemed like because the number was so huge. But
Yeah, you have enough experience, you could quickly look at it. Would everybody have that?
overall, though, I think it's done a very, very impressive job, and I'd be thrilled to use it as a starting point to get a model built.
Yeah,
So I think we can
that's
stop.
kind of my take. What I find really interesting, and this gets back to, if you remember, they said, hey, we may not demo as well. Demoing, showing the Excel eSports, that's kind of sexy. We can solve that. But that's
Right.
not real work.
Yeah.
What we've done here is a little bit more of the real work, and it has performed better. I think
Yeah.
what they said is true.
Yeah, no, I think I agree with you 100%. This is, outperformed probably virtually every other tool. I'm noticing here things like it's showing negative cash, which nobody would ever want to show on a balance sheet. So we'd have to understand why was the revolver. So it didn't know to build a revolver on the debt schedule. So again, these are modeling concepts and accounting concepts. Probably need to re-upload this, go back to the prompt and say, hey, we're showing negative cash. So can you build in a revolver, give it some instructions so that the revolver starts to kick in? And as a result, we have zero cash. But its ability to build schedules and mechanically link them all together was great. The only blatant error that we found was the way it treated working capital. Overall, though, I give this a very, very high grade, and it's done a really, really nice job. So
No,
we'll turn
I
it back
agree
to you.
with you. It linked a few things like why did netting come down at the bottom. So there's the revolver. There's some quirks in here. There's some things you need to work out. But on the whole, if you know what you're doing, this is a tool I could feel comfortable having it do some stuff and then me massage it. It could save me some real time. So
This would empower a good analyst could get better, but you have to know how to challenge it, push it, find the issues, right? And like we keep saying, every episode. So obviously your boss would obviously eventually want to see that net income is coming right off of the bottom of the income statement. That's more standard convention. But again, if you understand that, then you can do that and clean it up once you get it to work. Same thing like I did here with the working capital. But
yeah, so I
Paul,
think
I'll turn it back to you then. I'll stop my screen share because I think that
yeah,
I was
we're
right.
we're kind of to wrap up point. So why don't we stop? We'll stop your screen share and just final thoughts before we go. I mean, I very impressed with TrufflePig on the whole. I was a little nervous at first. Like I said, it struggled on the eSport cases, but on the work tasks, I give it pretty close to an A.
Yeah.
Not quite
Yeah,
there,
yeah.
but on the whole, it might have been the best one we've seen. It's right up there for sure.
100%, definitely up there. Didn't, again, maybe it's just getting used to it. I don't love working in a separate platform because that was, but I guess you have to get used to working in their own app and then their own spreadsheet and then downloading to Excel. I guess if it's very iterative, if you're going to do that, you're going to work on something, download to Excel and probably make some changes, tweaks, formatting improvements, re-upload it if you want to make more changes. So I don't know if that would be a bit of a pain to be downloading
I
and
think there is a
re-uploading.
little bit of pain there. So you got a little bit of pain with just learning a new spreadsheet if you're going to go back and forth. I love the fact that you can link out to all the websites and it shows them all. That was really nice. I
Yeah,
love the way it showed changes that are very easy to see. So impressed on the whole. I mean, something in beta, it's going to get better. If you're wanting a third-party spreadsheet AI tool, definitely one I'd consider, no question.
100%. Yeah, no, I think it's a great job, and I give kudos to them for developing this tool. It's certainly the best one that's been able to integrate the financial statements and actually do it correct from sort of an accounting standpoint.
Yeah, so great job, TrufflePig. We'll be back again testing another tool next week. We're not done. We have several more to go and a few other exciting things we're thinking about. So please stay tuned with us. We'd love to hear from you. If you've watched an episode and you enjoyed it, reach out to us on LinkedIn or send us an email. We always love to hear from the audience, and thanks for joining us. So thank you, In. It was a pleasure. Giles will be back with us next week, or In will involve his dog even more if Giles doesn't.
Yeah, Benny might be back if Giles needs to keep skipping off here, but we'll see. Anyway, thanks everyone.
All right, thank you.